today. First things first, we told our group days ago, actually over on the 28th, that if the market broke through, had a confirmed break of 43.42, that the market would then decline to 43.07. And today we did have that break. Let me put it on a 15-minute chart. It's a little clearer this way. First, we went down and we bounced here. We closed right at 43.42, and then we bounced up and we forecast this little bounce. But this move right here, that's unusual. That was not normally expected in this time frame through our work. And because they did it, excuse me, it falls into the 15% of the time that the market does something unusual. And within that 15%, there's a number of things that the market can do that are different or unusual. But in almost every case, unusual, not all cases, but in most cases, the market does something unusual, like in this case, breaking to new lows right here. That normally means a larger, more important move is underway. So that's how we interpreted this morning. The break, let me show you where 42 is. 42 is about right here. This is about 42. That's the level of 42. When they really got below that, it was clear that they had broken it. The forecast was they would go to 43.07. Today's low has been 43.0450. Earlier, it was the low was 43.0575. They will almost certainly break that low. This was just an initial place for the market to go, but it's pretty good. It's a sizable move. If somebody got in at 33 or 30, they were trading it down to 09 to 08. You know, you fade the numbers a little bit, meaning getting out before the market actually quite hits the target. But, you know, you had a pretty good move to the downside there. So it's really interesting that they've done this because it puts the market in a different position than it was before this. And a lot of things that we were working with before now have to be adjusted to take into consideration that 43.07 was done. So 43.07 is a really important level to us. And it was the first time when we forecasted as well, because this is the second time they've hit that level on the daily chart. So, you know, the first time they hit it is right here when they swung down. Let me just move this chart so it's not so big here. The first time they hit it was right here, where they went down when they went down to 42.9375, but 43.07 was reached and they closed above it, and they continue to close above it. Now, by breaking it, it would indicate, for reasons that are inherent in the nature of the market, that the market would move down to 43.07, and indeed we did do that today. Peter also says, could the S&P have made a low today? What confirmation on the weekly would you be happy with on the S&P to be out of a weaker position? I don't mind telling you that closing above 43.07 keeps the market out of a crash position. So the weaker position would be a crash position. If we close below 43.07, that's terrible. That's a really bad position. Even closing below 43.42 is weaker, but that only would indicate an immediate drop to 43.07, which we got today. So as long as we close above 43.07, we're still within the confines of a weekly bottom. There again, I'm referencing what happened on the daily, connecting it up with the weekly, and saying we're still in an okay position on the weekly chart. It's just like a detective gathering evidence and saying, hey, this is really what happened and this is who did it, something like that. Or that game we've talked about, what was the game where, you know, somebody solves the crime, he hit him over the head with a candlestick in the library, whatever that game was. It's kind of like that. Somebody can solve the puzzle.